Hey there friends, today we're diving into the world of investing and talking about something super important, fundamental analysis. You might be wondering what's that? Well, in the simplest terms, it's a method of evaluating the intrinsic value of a company. It's like being a detective, but instead of solving crime mysteries, your job is to figure out if a stock is a good investment or not. Consider this. When you're investigating a case, you look at all the evidence, right? You scrutinize every detail, every clue to understand the bigger picture. Similarly, fundamental analysis involves investigating a company's financial health, market conditions, and future potential. It's about understanding the company's story from all angles, so you can make an informed decision about whether or not it's a wise place to put your hard-earned money. And that, dear friends, is what fundamental analysis is all about. Investigating a company to see if it's worth putting your hard-earned money into. Now let's break it down. First up, financial statements. Just like the recipe cards that guide us to bake the perfect cake, these documents serve as our roadmap to understanding a company's financial health. There are three key financial statements to consider: the income statement, the balance sheet, and the cash flow statement. The income statement is like the list of ingredients. It tells us how much revenue the company is generating and what its expenses are. Just like you'd want to see a cake recipe with a good balance of flavors, we're looking for a healthy balance between income and expenses. Next is the balance sheet. This is like the baking instructions, showing us the company's assets, liabilities, and shareholders' equity. It's all about how the company manages its resources. Lastly, there's the cash flow statement. Think of it as the baking temperature and time. It tells us how the company is handling its cash inflows and outflows. So like a diligent baker checking the recipe, we scrutinize these financial statements. Look for consistent growth and healthy numbers. It's all part of the fundamental analysis recipe for investment success. Time for the second ingredient: market conditions. Think of the stock market as a bustling food fair. Each stall represents a different company with their own unique delicacies on offer. The overall atmosphere of the fair, whether it's buzzing with excitement or eerily quiet, symbolizes the current market conditions. Just as you'd observe the popularity of a food stall before deciding to try their delicacies, it's crucial to understand how a company is performing amid the market's hustle and bustle. Is it attracting a crowd with its innovative offerings, or is it struggling to stand out? Are people raving about it, or are they walking past without a second glance? Market trends, just like food trends, can drastically sway the success of a stall, or, in our case, a company. So, always keep a keen eye on these trends, understand their impact, and see how our cake company is performing in the overall food fair. But wait, there's more. The third ingredient is future potential. It's like peering into a crystal ball and predicting if the cake shop is going to open more branches and sell even more cakes. The future potential of a company is a crucial part of its overall attractiveness as an investment. So, how do we measure future potential? We start by investigating the company's plans. Are they planning to expand, launch new products or services, enter new markets? These are all signs of a company with a promising future. Next, we look at innovations. Is the company keeping up with the latest trends and technologies? A company that innovates is a company that grows. Lastly, we turn to the experts. What are they predicting about the company's future? Remember, no one has a real crystal ball. But by examining these factors, we can make educated guesses about a company's future potential. No one has a real crystal ball, but we can make educated guesses. And there you have it. Fundamental analysis in a nutshell. Just like baking the perfect cake, investing requires a precise blend of ingredients. You've got your financial statements, the recipe cards that reveal the company's financial health. Then there's the bustling food fair, or market conditions, reflecting the company's performance in the larger economic landscape. And don't forget the crystal ball, the future potential of the company shedding light on its growth prospects. But remember, just as a cake won't bake instantly, wise investing doesn't yield immediate returns. It takes time, patience, and a dash of diligence. It's about understanding the ingredients, adjusting the oven's temperature, and patiently waiting for the cake to rise. It's the same with investing. You need to understand the company, adjust to market conditions, and patiently wait for your investment to grow. So grab your financial magnifying glass, be a smart detective, and happy investing.